In today's video, we're going to be doing a mathematical analysis on where Bitcoin is likely to top out based on date range trends on the macro chart. Alongside this, we are going to be providing you the necessary tools to analyze the macro charts based on a technical perspective to predict potential top points and macro reversal points for Bitcoin so you don't end up holding your bags back to zero. Let's go ahead and jump in. Okay, MegaWhale team, welcome back to the channel. Thank you for tuning in. I hope you're all having an absolutely fantastic start to your week and end to your weekend. In today's video, we're going to be answering a massive question. This is, at what price point will Bitcoin likely top out and when will the top come in? We'll also be going over the monthly charts, discussing the possibility for a parabolic cycle, and most importantly, invalidations for that parabolic move. And by the end of the video, we'll also be jumping into the short-term price action, discussing what is happening on the charts, and most importantly, the key levels you need to be watching. So before we do get into it, smash that like button, hit that comment button, and subscribe to the channel. We post daily videos of Bitcoin focusing on the facts, the data, the technical and the structural information, no hype, no BS, no emotion, pure raw TA. If that is the kind of content you are interested in, join us on Telegram. It is the first link down below. You'll get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop of cryptocurrency with Bitcoin and the relevant economic news. If you are interested in taking your trading to the next level, join us on VIP, where we have nearly 700 members, where we post trading setups with exact entry prices, exact targets, exact stop losses, trade justification, exclusive analysis, and so much more. Alongside this, you'll get access to our group chats, our general chat, trading chart and education chat, trade setup, news, help, and daily video chat. If you are interested in getting access to all of that, go ahead and contact me in the pinned comment of the free channel by clicking my name or these links for more information. Let's go ahead and dive on in. So starting on that market data, as we know, coming out of the weekend now, volume generally starts to pick up a little bit. We can see volume has increased by 9%, sitting at 93 billion. 24-hour liquidations up 25% at a total of 82 million. Of the 82 million in total liquidations, 42 million have come from longs, and 40 million have come from short positions. Taking a very brief look at the last 24 hours of price action, we can see some inability to sustain at these levels. Bitcoin has been moving down to these low points at this 68.5 to 68.4k support region again. Again, not too much movement over the last 24 hours, more or less has been moving sideways since the 25th, so over the weekend. We'll be discussing in more detail what is happening here and what to expect next at the end of today's video. Moving over to the broader markets, the DXY again is moving downwards ever so slightly. We are very much still keeping our eye on this uptrending trend line here on the RSI. A breakdown of that trend line would signify a negative momentum shift and thus increase the probability of a breakdown of this yearly uptrend we have here on the DXY. A breakdown on the DXY would indicate again a falling dollar, which would suggest risk asset prices are more likely to increase, Bitcoin and traditional assets alike. However, until we are while we are sitting above this trend line, and while we are sitting above our trend line for the price structure, we can see we do have support here, which again could increase the likelihood of a continuation higher. Again, watching a break over this prior high point to really throw the momentum back in hands of the bulls. Until then, we do have a possibility to see that breakdown. The breakdown or continuation upward will be heavily reliant on the upcoming news, particularly on the 13th of June, which is going to be the next Federal Reserve interest rate decision. This is going to be a very big interest rate decision that's going to potentially sway the market in either direction. Moving over to the broad markets really quickly, S&P 500 again hasn't opened up yet. Nothing too serious over here. Retesting that prior high point. We are still looking for a weekly candle close above that prior high for a directional continuation upwards. Whereas if we do not see that, we are going to be moving between the range low at 5,000 and the range high, which is 5,330, which we are currently retesting. If we do look at this black and red line, these are both bullish and bearish trigger points, meaning the trend on the higher time frame is impacted by the directional breakout of these levels of liquidity, meaning a break under 5,000 will indicate we are moving into a higher time frame downtrend, as this higher low level has been lost, signifying an inability for the bulls to continue to price action upwards, reversing the trend downwards, whereas a break of this high point over here will signify a continuation in a trend, and thus a continuation in the developing strength and the overall uptrend the market has been in for quite some time, expecting to see new highs on the macro. The same goes for the Dow Jones here, exactly the same levels. Black line is an upper bullish trigger point, and this lower box is going to be the lower area of support. A break upwards equals a directional continuation higher. A break lower equals a directional continuation lower. That is it for the broader markets, guys. Before we go ahead and get into the crux of our analysis, a quick word from today's video sponsor, BitUnix, and we'll jump on in. I'd like to introduce our partner, BitUnix. BitUnix is a global, non-KYC, no country restriction exchange, making it a perfect exchange to trade on if you're from the USA, from Canada, the Netherlands, or just prefer to trade without KYC. This exchange is a futures and spot exchange with over 200 different trading pairs, and some of the lowest fees in the game. If you sign up with my link down below, you'll get access to 15% off your trading fees, as well as an exclusive reward center where you can claim up to a multitude in USDT prizes. So go ahead and sign up with my link down below for 15% off, and I'll see you in there. Okay guys, let's go ahead and jump into it. So in today's video, we're going to be answering a big question: where will Bitcoin likely top out at in terms of price? And we're going to be answering this based on two specific date points, which will be deriving from the monthly chart based on structural breakouts of the prior all-time highs on a date range trend. We'll explain that in a second. Furthermore, the numbers we're going to be presenting you today are based on estimates in relation to two assumptions, which is number one, that Bitcoin dominance will reach 40%, okay, as we have seen in the prior two bull markets. We saw as Bitcoin dominance reached 40%, we saw the 2018 top. And as we reached 40%, we saw that 2021 top. So we're expecting Bitcoin dominance to reach 40%. And the assumption number two is that we'll be expecting the total to market cap, which is excluding Bitcoin, which is Ethereum and altcoins excluding Bitcoin, to reach this uptrending diagonal trend line, which are price points of 4.65 trillion, okay, and 5.3 trillion on the specific date points we'll be estimating in just a moment. So a few assumptions here, but what this is posing to do is to give an estimate of a potential top price range we could expect if the top is in by these specific estimated dates. So let's go ahead and discuss. If we go to the monthly chart, what we can see is we can see historically every single time Bitcoin breaks above that prior all-time high of the prior cycle, we enter over time the parabolic phase, which takes us to a new high point. Very simple stuff. So if we take a measured date range move from the monthly candle break over that prior high point to the all-time high, we can see in that first 2017 cycle, we had 8 bars. This is 8 months from the monthly breakout to the high. If we move over to the 2020 to 2021 cycle, from the breakout to the exact high point, now we're not looking at the prior cycle high, we're looking at the exact price action high, we saw 12 bars. So we have 8 to 12 bars. If we apply 8 to 12 bars from the point of which Bitcoin broke over on the monthly chart, the 2021 high point, which was in March 2024, we can say that gives us an estimated top date between November 2024 and March 2025. So the earliest projected top based on this pattern we have seen here would be, again, November 2024, and the latest March 2025. So based on this theory over here, the big question is, well, if we were to see a top between November and March, what would the price of Bitcoin be, assuming Bitcoin dominance drops to 40% as we have seen historically? Now, this estimate is fantastic because it also tells us the min and max price point we would expect between these 2 points, and therefore if we see a top prior to November, we would expect a lower price estimate than what is estimated at the point of November, and if we were to see a top after March, we would expect to see a greater price estimate than what is estimated at the point of March. So it not only gives us a range of price targets within that specific date range, but also it gives us a method to analyze what the price targets will likely be if the top is in at a sooner point or a later point. So to do this, we need to move to the total 2 market cap. So we've gone ahead and analyzed it over here. We've written up this little bit of data over here. What we can see is we'll go off our latest top first. So our latest top is expected to be in March, April 2025. Okay, for the end of March 2025, so we just took the 1st of April 2025, at a 5.337 trillion market cap, which we can see over here, at a 60% dominance, okay, because remember Bitcoin dominance would be at 40%. This is of a total market cap of 8.895 trillion, okay. If we add the 40% to 5.337, we get a total of 8.89 trillion. That's the total cryptocurrency market cap, which is estimated to be at the time of April 1st, 2025. With application of that 40%, we would expect the Bitcoin market cap to be a total of 3.558 trillion at the date point of April 1st, 2025, assuming Bitcoin dominance is at 40%. If we then go ahead and multiply that by 1,000 divided by circulating supply of Bitcoin, that would bring us to a price estimate of 180,000 US dollars will be the maximum price Bitcoin could possibly reach, assuming Bitcoin dominance reaches 40%, okay, and the price chart reaches 5.33 trillion on the total 2 by March 2020, April 1st, 2025. So that is going to be the upper price target for Bitcoin, assuming again 40% on dominance. The price is in at the top of April 1st, 2025, and the total 2 market cap is 5.337 trillion. So assuming the earlier top, guys, we're looking for the earliest top now, we do the exact same equation. We take this number here, which is going to be 4.654 trillion, okay? 4.654 trillion is 60% of 7.756 trillion, okay? At 40% dominance and a total 2 market cap of 4.654 trillion, that will give us a Bitcoin market cap of 3.102 trillion. 3.102 trillion divided by the circulating supply of Bitcoin multiplied by 1,000 is a price point of 157,000 US dollars. So if we were to see the Bitcoin top come in November 2024, and the Bitcoin dominance drops down to 40% in that time, okay, and we see the total market cap reach this level of 4.65 trillion, we would likely see the Bitcoin price reach 157,000. Those are the 2 targets based on this mathematical equation. Now, the very cool thing is, depending on where the total reaches, okay, for example, if the total reaches lower, but Bitcoin dominance reaches again the same 40%, or the total reaches higher and Bitcoin dominance reaches the Bitcoin dominance reaches 40%, that could impact again the estimations on the price. So there are limitations to this theory, but what this theory is supposed to do again is to give rough possible targets of Bitcoin based on a factor we know, which is the 40%, and a variable factor, which is going to be the price point of which the total 2 reaches and the date of which the top is in based on historical patterns. Very interesting stuff. Keep an eye on it. A very interesting way to analyze potential tops, not just pulling random numbers out over here. This is based on data, based on facts. Again, this is not something I'm personally going to be using to predict when the top will be in. Again, if you're looking at predicting the tops, you need to use leading information. This is just to give us a rough estimate. So what it tells us is if we see Bitcoin reach 157 to 180,000 between these 2 dates, okay, that would be a top signal based on this formula. If we were to see either of these price points reached before or after, that would also potentially be a top signal for Bitcoin. So that is how we're using this information. Let's move over to the macro charts now and discuss the possibility for a parabolic phase, and more importantly, how we can use our leading data. This is where it's important. How we can use the leading data to project when the top will be in. And I always say, guys, if you're looking for a specific number, okay, again, if you're looking, I'm not going to sell into 200,000, or I'm not going to sell into 150,000, you're going to be wrong. You're most likely going to be wrong because you're making a massive decision, which is I'm going to sell all of my coins once Bitcoin reaches one particular price. And there's added the probability of reaching that one particular price compared to any other particular price, you're really putting your eggs on what would be considered a very, very high risk bet. It is not a good decision. What you need to decide on, more importantly, is when should I be scaling out of my positions based on leading data, and leading data is going to be based on developing strength on the higher time frames. And as we know, the strength of price action of the technicals are derivatives of the price action charts itself, and the price action chart itself is a reflection of buyers and sellers, and buyers and sellers are impacted based on emotions, and again, emotions are impacted based on leading events, such as developing news events, economic policy, monetary and taxation policy, developments within the particular industry, such as ETF news. All these different things go ahead and impact whether or not buyers and sellers are likely to click buy or click sell. And then their decisions are then relayed to us via this leading data. So we'd start to see significant shifts in the strength behind these buyers and sellers on the higher time frame based on certain validations that could indicate tops are in, and that could happen at any particular price point. So that's why using data to project where the price is going is a better estimate than using price. When I look at where the price is going for an asset, I very rarely look at the price of the asset. The price of the asset is pretty much irrelevant in my eyes. I look at the strength behind the asset, what is actually moving the asset. That is what is important. So we're looking at the data over here. What we can see, and we'll keep this one nice and brief, guys, is historically when we see the lower band of the Pi cycle indicator break into the Ichimoku cloud, which we have seen, we actually saw it about in March 2024. From that point onwards, okay, from that point onwards, and what I mean by onwards is from that particular point until we create a Pi cycle high. That is what I mean by onwards, until the Pi cycle high. Until the Pi cycle high is in, we see the price action remains above the midlines of the Pi cycle indicator, which is going to be, let's go ahead and get rid of our baseline over here, which is going to be the yellow and green lines, the high short and low short moving average slash EMA. We remain above these levels until we break down, and that is when the Pi cycle top is in. Furthermore, when the Pi cycle top is printed as a consequence of the breakdown of those moving averages, we see the vortex trend indicator create a high on this trend line. So we have double confluence over here, double confirmation that a top would be in once we start to see a breakdown of the high short EMA, okay, moving average, sorry, plus a retest of the vortex trend indicator. And this combination of indicators, which is a reflection of high time frame shifting momentum, which historically has predicted tops, is irrespective of the price of Bitcoin, which is fantastic because it eliminates us to know what the price needs to be. Furthermore, it allows us to make a decision based on developing leading data rather than, oh, we're going to hit 200,000, we're going to hit 400,000, we're going to hit 150,000, or we're only going to go to 80,000. It doesn't matter what the price of the asset is. It matters what the data is suggesting. How is the strength? How are the buyers and sellers? What are the narratives pushing the price action upwards? Are the developing narratives that could push the price action downwards? What is the global economic policies suggestive of risk assets' future potential? These elements are very important when determining where the price action go on the macro scale. Very rarely do we look at the particular price of the asset, so again, the particular price of the asset doesn't necessarily tell us where it's going to go. The particular price of the asset is just a representation of the market deems the asset to be worth at any particular period of time, okay? You have to get yourself out of the way of thinking of numbers and start thinking about the consequence of developing narratives and strength in future periods. Remember, the market is future seeing. It adjusts based on what is perceived to be risk at a later date. So when we're looking at stuff like this, again, when we start to see these patterns which have been present in every single cycle, we've seen the exact same pattern. We break through the Ichimoku cloud lower band. That happens at the same time we break over those prior high points. We send into a parabolic rally. We create a price cycle high. At the same time, we create a vortex trend indicator high, and we break down on the midlines continuing lower into a bear market. When we see these patterns that have happened 4 times now without fault, okay? The reason these have happened 4 times without fault is not because our institutions are in, or we haven't had institutions, or we haven't had ETFs, all these random things people like to make up. It's a consequence that price action, particularly, okay, these technicals are derivatives of price action, right? They can't be adjusted. They are what they are. You have to take them at face value. By ETFs coming into the market, it's not going to change the way these technicals actually present themselves, because they are derivatives of the price action itself. We can't extract them from each other. They are the same thing. Technicals are the same thing as the price action. So when we're looking for, again, validations that the weakness is becoming present, we look at the same validations regardless of the climate of which the market is in. Regardless of if there's ETFs, regardless of whether or not there's more institutions in. Yes, those things can impact the day-to-day movements of the asset, but we're looking at high time frame shifts in momentum, which is more likely attributed to macroeconomics, okay, things these institutions don't have a lot of control over. Then these are present on the higher time frame chart. So we're looking at, again, a breakdown of these moving averages. That is going to signify tops are potentially in. If we see those breakdowns prior to creating these price cycle high points from the vortex trend indicator, that could be a big warning sign that we are seeing an earlier top, or we are seeing what we have seen historically, the pattern which results in a parabolic phase end, right? If we see the price cycle midlines breakdown, that would suggest the parabolic phase of which we have seen in the past may not happen. And that is something big. So with that being said, guys, let's move over to short-term price action, wrap up the video. Short-term price action. Not much has happened, really, guys. Not much has happened. We have seen a little bit of downward move over the last 24 hours. Again, really not much happening over here. We did break out of this downtrend. Don't know why I had the fib level up. We broke out of this downtrend over here, which you can see by this black line. I'll go ahead and make it black. Again, we did break upwards. We've seen a bit of exhaustion over here. We weren't able to really push past this level of short-term liquidity at around 69.6. This is going to be a bullish trigger point now, but we've come back down to retest our support at 68.5. So for us to see that directional continuation upwards over here into this level of higher liquidity, this upper level of liquidity, which is going to be the range high resistance, okay? For us to see this directional move, we'll chuck an arrow over here, we need to break above, okay, on the short term, the 69.6K level, okay? Break above here, we'll see a directional continuation. On the short term, we are seeing a retest of our base of support. We can see a massive area of liquidity here, which is again coinciding with not only this uptrending diagonal support level we have, okay, also the POC level in the short term, but again, our major $67,000 resistance, which is now a level of major support. So on worst case scenario for the bears, the bears scenario, we could see a correction down to this region. I'd be expecting a bounce from this region upwards. That is a short term, not going to go much more into it. If we see the price action break here, expect upwards. If we see the price action retest here, expect a bounce. That is it, guys. Thanks for watching. Have a fantastic day. Catch you guys in the video, and we'll see you guys then.